of monthly rollover report. Today we have with us Mr. Manoj Velar, a veteran in derivative market with profound understanding about the subject. Manoj has been spearheading derivative segment for Religare broking since last 9 years. Manoj has a strong hold on option segment, especially index option, which constitute lion's share in the overall market turnover. His grip on derivatives data enable him to foresee near-term market movement, and for this very reason, we are conducting this webinar. And he will be supported by Mr. Gaurav Arora. Gaurav has recently joined Religare, and in no time, he has been our key resource to generate short-term investment ideas. BTech by qualification, Gaurav has a good understanding of charts, and his ability to understand data has been contributing significantly towards wealth creation for our clients. Gaurav focuses on the stock features and stock option side of the derivative segment for Religare Broking Limited. Now, I would like to invite Mr. Manoj Velar to start the session. Manoj, over to you.
Yeah, thank you, Suraj, and good afternoon, everyone. So I hope I'm loud and clear. So welcome to this webinar on monthly rollover reports, wherein we try to understand what exactly are the data pointers that we might look ahead for any series. Now, if we go back to July, let's just see what happened in the last 30 odd days in the July series. Statistically, let's say once in every 10 expiry, you get an expiry where the Nifty is plus or minus, 8 to 10%. And July, more or less, if you see, it was a good 7%. And thankfully, this was clearly noted, and we had the monthly strategy in the start of July itself. So the things have worked precisely that 800 odd points, right from 16,000 to almost 16,800, 900 has been captured in the strategy which we have given monthly. So first thing first, the monthly strategy that we gave takes into account an expiry to expiry move. So the short-term movements or maybe the weekly movement should not deter it from exiting until unless obviously it's a stop loss trigger or range more towards the target. So starting with July, the Nifty recorded a good 7.5% move, and the Bank Nifty did a good 12%. So almost an outperformance, if I might say, by about good 4 to 5%, and that we saw in the index calls as well. There were a lot of index calls, preferably plain vanilla in the Bank Nifty. Now, after this rollover, it was an impending US Fed decisions and the quantum of the rate hike that might do. So there was some rollover shying away which happened in the first 2 to 3 days. So after the rollovers, what we see now and what we project for the month of August. So I'll just share my presentation. Obviously, more than the presentation, it would be the data pointers that we'll be discussing or just giving out, which will analyze and help you. I'll just share my screen here. I hope this is visible to everyone. So like every time, derivative analysis includes a lot of statistical data, but primarily when we start any analysis, we go into a comparison data. So like always, we look into what the Nifty did in July when it started the series and what it is doing now that August has started, at least on the contract size. So if you see Nifty futures, when we started July series was a good 1 crore 12 lakhs, almost 112 lakhs is what the amount of position in terms of Nifty futures were there. And now when we are starting the series this morning, we were almost at 89 to 90 lakhs. Now, obviously the quantum is less, but then there are two ways to understand this. What happens, we know that last, let's say 90 to 100 odd days in the market has been difficult, and there is a lot of corrective moves which has happened both into the index and the stocks. So an institution way or maybe a cultured way of being in the market is always the Nifty futures is used as a hedge. So we look into something called as a hedge ratio, which simply says what is the amount of Nifty futures to the amount of derivative entire stock futures, let's say, which is ruled from June to July and from July to August. So the ratio between them is called as a hedge ratio. So what we have found out is this time when we start this new series of August, from July to August, the hedge ratio has been lower. It is almost at 8.8% versus a 10.5%, which says that Stock specific, there is more positioning into the August series than a July, or vice versa. I might say that the Nifty futures used to hedge the position is less. Now, obviously, the perpetual direction of any stock or a cash market is on the upside, so the hedge is always on the downside. So it might not be wrong to say that we have seen less amount of short rollovers, and it is primarily more of long rollovers. Even though the quantum is less, which we compared to July, but whatever we have in August is more of a long rollover. So that is a good indication. So the volatility index, the VIX, which we usually discuss, that is an indicator which tells what is the near-term nervousness in the market. When I mean near-term, it is the next 30 days which might come into the August series. I guess 28th August is when we have expiry. So that says that the fear of falling the Nifty from a good 800, 850 point, which used to be there 80, 100 days before, has come down to a good 680 points roughly. So being there, there is a good amount of sentiment which is prevailing in the Nifty, which clearly implies that if there is a small correction of 200, 300, 400 points on the Nifty, there would be positions coming into, and we might see a follow-up buying. If you remember, this happened exactly on the weekly expiry day as well. That is on Tuesday when the Nifty made a bottom. From there, it has varied about 500-600 points. So what is the input we take? We believe that August has started on a smaller note in terms of participation in the Nifty. If I might simply say, today they have added a good 10 odd percent. So we almost at 1 crore as of today's closing. But then obviously the Bow copy has certain changes that come in. But if I simply go by expiry to expiry, the positions has been a bit less, no doubt about that. But whatever position the Nifty has carried, it is carried on a stronger note on a long rollover. So that is one positive that we can take from it. The second, obviously, this goes with the Bank Nifty as well. So if we see on the Bank Nifty also, almost 3.5 lakhs is the position which is less. We have the next slide which will say about that. We always say look into this part of this is for the monthly contract. So if you see 16,000 as a strike, 16,000 is where there is high accumulation of put writing, followed by almost same at 6,500, and the blue bar which you can see, this is for the call option. So 17,000. Now obviously this has changed in today's date, but we would be talking purely from expiry point of view. So we believe that the put writers, almost a good 42 to 45,000 contracts were there, giving a good base for the Nifty at 16,500, and the call writing is quite on the upside. So if I might say, now we would see the next trigger or the next resistance with the strike would be 17,500. So the roughly range that we expect that Nifty might be in 16,500 to 17,400 for the August series, and we believe that 17,400, 500 might act as a resistance. Stock specific, we like 4 to 5 stocks. Obviously, there are good amount of sectors which are doing good. Like we saw a good amount of buying or short covering, if you might say that in Nifty metals and the metal index and the metal stock. But then stock specific, as per the pure statistical data, we believe HDFC Bank, ITC, Rain, and Bharat Forge. This would be the main stocks that can outperform this series of August. So going to the next slide, this is more about Bank Nifty. Obviously, Bank Nifty, if you see the financials and banks, they contribute almost 30 to 33% in the Nifty. So that is one single largest sector. If that gets biased into a positive mode, then it's as it is like 1/3 of your Nifty is positively biased. So then the Nifty usually follows the trend. Or likewise, when the Nifty is positively biased, and if we get a good traction in the Bank Nifty as well, that trend is strong, and that is exactly what we saw in the Nifty from 16,500 to almost the so-called 17,200 close that we have seen now. So for the Bank Nifty, we believe that obviously 38,000 odd might be the range now. We are not getting in more into the maths, but the Bank Nifty cannot keep outperforming throughout. So last month, as I said in July, it is outperformed almost by a good 3 to 5%. Now, in this month of series of August, we expect it to outperform a bit, not really much. So we expect it might be at par or maybe 1% or 2% more than the Nifty. So 38,000 is where we believe some resistance might come in. Now, this is a simple graph. It says the option pair, but we would not really look into that because if you have attended the training, which we usually do, so we say that for any strike to act as a resistance or support, at least the contracts has to go up to a good the entire open interest has to go up to around 80 to 1 odd lakh. So we believe that the Bank Nifty outperformance might be there, and 38,000 might be the resistance that we might see in the script. Now the stock specific, as I said, HDFC Bank even tops here. So ICICI, HDFC, and Federal Bank, this would be the stock that we're expecting that the Bank Nifty which might outperform. Now, simply looking into the rollovers, now this is not much relevant, but then we generally see what is the amount of position which is being carried from July to August. So IT for the, if I might say, because if you see last 60 days, or at least 2 contracts, or at least 1.5 contracts post the previous results of Infosys, we have not really seen IT as a pack outperform, but then yes, there is some positions which are being rolled, so there is a possibility we might see some more traction on the IT side. So IT, textile, and pharma. Now, obviously, textile doesn't have much weightage, but we would simply say that pharma and IT would be the top 2 sectors which are seeing better rollovers, or maybe tops the list at around 94%. OMCs has seen some short positioning in at least the last 3 to 5 sessions. So we have seen lesser rollover. When we mean lesser, it's percentage to what we have seen best. So 90, almost 88 to 90 is an average we have seen as of now. It is around 90%. Now this graph simply says about what is a percentage change. So we'll go more precisely into stocks. Now guys, I guess these stocks have outperformed today as well. But for stock specific, when we say that, this would be the stocks for the entire month of August, there is a potency for this to actually outperform. So we believe that rain as stock, I guess today it's almost closer to this level, but now a weighted average price, if I have to give today's explanation, a weighted average price of 168 to 172. Again, that becomes a good level, and there is a potential of almost 188 to 190 on the stock. So this would be the first stock, because we have seen good positioning happening in rain commodities, rain as a stock. Second would be power grid. Now, power as a sector, if you see, there has been less positioning. When I mean less positioning, every sector has a weightage, and we have not really seen much buying except in a couple of stocks. So usually in power as a sector, Tata Power and NTPC becomes top pick, but then what we have seen is stable short covering which has happened into power grid. So we believe that this stock can rally almost to almost a good 228 to 230 levels. On the downside, we believe that 208 to 210 might be a good support for the stock. So these are all cash-based delivery recommendations. We would not really encourage going into a stock future. The reason, as I said, because the prices might have surged, and even if it is not, a hedge is totally necessary. Now I hand it over to Gaurav, who will give you more information about a couple of other stocks into the banking sector.
Thank you, sir. Thank you, sir. Hello, everyone. I would like to discuss about our stocks, apart from the 2 stocks which sir has discussed already. First is HDFC Bank. Before talking about HDFC Bank, if we talk about Bank Nifty first, just to reiterate what sir has just mentioned, the index gained nearly 12% rise in price with decline of 15% OI in July series. So the majority of shorts which were in the index or some of the heavyweight stocks has been covered. From here on, only fresh built up will dictate the move. Coming to our pick, we like HDFC Bank. The stock has been consolidating in a range of 1325 to 1410 in the July series. The move happened on the back of short covering. We expect positive momentum to continue in HDFC Bank and believe it to trade in the range of 1375 to 1510 in the August series. Talking about the other stock which we would like to talk about is Gnfc. Gnfc is our second pick from the chemical sector. First was Rain Industries, which the sir had discussed. Almost all the stocks of the chemical sector had shown good run up in the July series. We prefer Gnfc. Gnfc has gained over 20% with good long build up of 20 to 25%, and the longs being rolled at good 91%. We expect good upside in the stock and would suggest to keep a close eye on. So these were the stocks which we are liking for the August series. With that, I will hand the call back to Manoj sir. Thank you.
Yeah, thanks, Gaurav. So, guys, just to simply say, so what we have seen in August series, what the implications are is there is a good chance that the volatility index might slide down to a 13-14%. Now, what does it mean? How does this line help? Is when we trade at least for the next 10 to 15 odd days in the index, try to go for an at the money or maybe 100 odd points, because even in, if today if you see the 17,200 stack, just to give you an example, even though the Nifty moved, it made almost a high. The morning high, the premium made is not really that. So we could see almost a 10 to 20% reduction in the option premium, because the volatility index or your VIX or the IVs, which used to be around 17-18%, it might tend to come down to a 14% or a 13%. Now, when a 2% strike happens, that might take away a good 8 to 10%. So 100 rupees premium can become as cheap as 92, and that is exactly where we'll see a lot of option selling in this month. And so we have volunteered for that as well. So just to sum it up, what we have on the Nifty here is the short position in the Nifty is less. We have seen that the volatility index might dip, and we have seen good positions happening into the stock future. So preferably the amount of short in terms of index, both the Nifty and Bank Nifty carried is less. So whatever positions would be based on delivery based buying or the long return that you see in the stock, that is point number one. Second, now because the IVs are expected to slide down by the 2 to 3 odd percent, try to buy at the money option or trade in an at the money option, preferably more than a 200 odd points, because last 3 months we are used to even going beyond a 200, 250 odd points. So that would not really make money. The example of 17,200 that we saw in today's trade, that would be one thing. Stock specific, obviously, apart from this stock, there are a lot of stocks where we have seen long build-up, but this is stock specific in terms of expiry, where we have seen IT and pharma. This would be the two sectors where there is good long rollover or the maximum rollover that has happened for this series. Now, coming to the monthly strategy. So what we do is when we decide or when we design a monthly strategy, we take into consideration the potential up move or the swing in the Nifty that might come in, along with the number of days it might take. So we do not really go very systematically in terms of selecting the strike. We might tweak a bit. So that is exactly what we might see in this as well. So when we started this day today, 17,100, and most importantly, this has to be a month-end option, because we are selling the bigger premium and hedging it by taking some options. So the view here is we do not expect Nifty to hover beyond the 6,800 odd points linearly. When I say linearly, is adding up. So we are expecting 16,500 and 17,500 roughly to be the range with the position that we have. So if we get a correction, we are expecting a follow-up buying to come in. And for the Bank Nifty, that resistance will be around 38,000. So a better strategy to do here is you need to sell a month-end 17,100 call option and put option. Obviously, the prices changes, but I guess the total is more or less what we see here, 590. And obviously, we are not selling an option, and obviously selling option has got its own risk, even though the expiry is 28 odd days from now, 28, 30 odd days. So we would hedge it by simply buying a 17,700 strike. So, and a 16,300 put. So having sold a straddle of 17,100, we are hedging it by buying the break even and beyond call and put option, so that we expect that the Nifty might be in this range. So how do we profit from this? We now, obviously the payoff diagram is a bit complicated for everyone to understand, but if we simply see, we expect the Nifty to be around the 17,100 strike for major part of this series. So that doesn't mean the Nifty might be there. Nifty might go to a 17,100 or might come back to a 17,200, go back to a 16,800 and come back. So every time it passes that pivot of 17,100, this premiums could subside, and like we are expecting the VIX to fall or the IVs to fall more to a 2-3%. So these premiums, this 590 rupees would shrink faster than the call and put option which we have bought away, and a target of close to 150 is what we are expecting. Obviously, every strategy has a stop loss, because the rationale or the logic can absolutely go wrong. So the net premium that you get in the strategy is 450 rupees. When you sell option, you receive the premium. So the net premium is 450. You need to keep a 200 point stop loss 650, and then the upside, the target is around 150. So if you remember, guys, in the July contract, we had almost given an opposite of this, because we are expecting the Nifty to move more towards the swing, and that was a good 800,000 odd points. So which happened? So I guess the net premium was around 330 odd rupees with a target of 700. So we booked it around 450 to 500 rupees. The reason, a couple of clients also called in. The reason we book is when the Nifty does not rally or subside to the timing that we expect it might do when we start a contract, we generally hedge it or maybe cover the risk by squaring of the strategy and getting into a fresh one. So this strategy is highly recommended. Selling option of 17,100 saddle for month end for 590 rupees, and you hedge the position and you leave it for the August series. And this net premium of 450 can give you a 300 rupees profit. That is the expected target of 150 rupees on that. Now, because it is hedged, the premium or the margin, so-called margin that you would require would be lesser, because when you just sell a naked call or a put option or a combination, there is a premium which goes up. Or in this case, we believe it would be down. If I'm not mistaken, it would be closer to 48 to 54,000 odd for a contract, for a entire 4-leg strategy which should be done. So this is one strategy where clients with good portfolio, good cash margin, doing monthly trades in the index option should be doing this. And then obviously there are weekly strategies which come in. So to just sum it up, we have seen strong but small positions in Nifty, but those are majorly long positions. Same goes with the Bank Nifty. The Bank Nifty has outperformed the Nifty last series by a good 5 to 6%. So we expect it might be at par or maybe 1 or 2% more than the Nifty, but we really do not expect such high outperformance from the Bank Nifty in this series as well. Third most is the volatility index. The VIX might slide down to a 13 to 14%. So try to stick to at the money option, maybe 100 points here and there. Not really go beyond that. For the Bank Nifty, this comes to around 300 to 400 points. Do not go beyond the 400 points strike when you're trading a plain vanilla call or put option into the Bank Nifty strike. And selling call and put option with this strategy is what we recommend at this point of time. The 4 major stocks that we like would be Rain, Power Grid, HDFC Bank, and Gnfc. So I guess this is roughly what we have. So the projection is we are expecting Nifty is still in buy on dips, and the dip might now, as of today, the dip might qualify as a 16,800. So what we mean is, if we get a dip of 16,800 to 900, that is where the positional long can be taken for a good 500 odd point. And on the upside, we might see some resistance coming into the Nifty at 17,500 levels. These levels for the Bank Nifty will be around 38,400 to 38,000. I guess this is the basic crux of the August series that we have. Now, Swaraj, if you could ask if there are any queries on this, we'd like to answer those.
So participants, if you have any questions, request you to type in a Q&A section. So if you have any questions pertaining to monthly rollover report, please type your questions in the Q&A section. In the meanwhile, let me initiate the poll. We also wish to have your valuable feedback. Request you to share your valuable feedback with us. One more minute to close the feedback form. All the participants are requested to share your valuable feedback.
Meantime, Manoj, we have seen good amount of short covering in most of the large cap names, and metal is also one of the space where we have seen significant amount of short covering. The space was underperforming because commodity prices were correcting, and now we are seeing that because of Fed stance, there has been good amount of bounce back, and even commodities have bounced. Are you expecting this space, not from medium term perspective, but purely from short term perspective. And when I say short term, I'm talking from 1-2 weeks perspective,
Right.
to do well, and or should this space still remain as a sell on rise?
Yeah. So answering to this question now, I have a different way of looking into what how a sector performs and other sector shies away. So this outperformance from the banks, which has happened in the last one, we are not really expecting. So some other sector has to take over. Now, obviously, a fresh move in, if you say last one, we have seen the auto sectors come up. And then there was some correction. Pharma is shying away from last 2-3 months. So whatever buying we have seen in today's metal as a sector, especially Tisco and JSW, etc. So I believe this sector has a more 4 to 5% on an average on the upside. So there is a high chance that at least for the next 15 days, metal would have a positive alpha with respect to any other sector, is what I believe.
So right, so we have got a couple of questions, but it's more of a stock specific.
Yeah, so guys, stock specific, obviously, we are open throughout and the queries can be sent at equity research. So, anything specific about understanding how a portfolio, because I guess last time hedging a portfolio was asked about. So if we need some queries about what the CDs might pan into or what the sector specific view, or like the metal space that we just discussed right now. So if we have queries on those, we can, or maybe the Nifty strategy.
So Manoj, we have got a question from Benjamin Robert. His question is performance of realty sector in August series. So
okay, now at least in the last 8 to 10 days, 10 days of the July series, we have actually seen that stock specific realty as a sector has not really given you a negative move, at least in terms of cash based buying from what the weighted average has seen. But today specific, I would say that we are not really seeing a follow-up buying. The most important part in a derivative trade in a sector specific performance is whenever it comes back to the previous day average, if there is a follow-up buying, then that build up. So we are expecting that to happen more into a metal sector. But reality, yes, stock specific, there would be some movement, but like a growth rate and all, but that would go very specifically if you send an email, we'd look into the stock specific movement. But I guess as a sector, we would not really see, because I guess in a year, it would be hardly 1.5-2 months where we actually see an outperformance from this as a sector. So these might not really outperform, but it will work in tandem to what the Nifty might.
Gaurav, Manoj mentioned that generally there is a shift in sectors. So if banking has outperformed and he's expecting other sectors to now take over, within banking, anything which is still looking stronger and might continue to do well within banking space?
Yes,
from
sir.
HDFC Bank?
Pardon? Except HCFT Bank.
Apart from HDFC Bank.
Yes, sir. Apart from HDFC Bank, we like ICICI Bank. The other thing why we are liking the ICICI Bank, the move, because ICICI Bank has not fallen like the other bank have fallen in the when the banks were struggling. So considering the data, we like see the short covering has been done. Now from here on, the fresh move, fresh build up will dictate the move. So we believe the momentum can shift from, if the any other bank would perform except from HDFC Bank, it would be ICICI Bank.
Yeah, so just to add a couple of things, like in the slide also we mentioned it can be Federal Bank as well. The reason why I'm mentioning Federal Bank is, we remember right from 88 to 94, this is an average where always the cash delivery in the stock goes up, and the resistance for the stock usually comes at 118 to 120 odd. So even today, I guess there is a good 3 to 4% still left with the weighted average price of today. We expect Federal Bank along with obvious HDFC and ICICI that Gaurav picks up. So we usually do not get into weaker banks, but then when the momentum is good, these can be an alpha. So we believe HDFC, ICICI, and Federal Bank can be the banks in the banking sector which can outperform or do more positive.
Actually, Reliance is a sector in itself, and you track a Reliance. So there's no harm taking a Reliance query.
Yeah, so guys, I'll just comment on this. I'll give you a very specific or maybe a very easy way to always understand Reliance. What I found out is Reliance Industries, whenever you have a participation on more than 8 to 9%, which happens in the first 2 hours of the trade. Now, obviously, it might be related to a lot of how the institution get in, but 252522 or 2525, this happens to be a pivot. Beyond this, Reliance can open up to almost a good 80 to 90 odd rupees. Else, it comes back to the same range of 2420 to 2480. That is the 60-80 odd point where we see a good buying on the downside and resistance on the upside. Now, if it has to make a new move, it has to support the 25-22. And beyond that, only we believe Reliance can give you a good 60-80 odd point. Otherwise, be in this state. That there would be at least I see 3 to 5 odd days in every month where we see good amount of participation. And see, it's a wrong way of saying, but generally when your bank Nifty does not perform, it is Reliance which stands up and it fills the gap. So if I might say, that is one trigger where you see good amount of participation, a good 8 to 12% intraday itself, and then the stock moves a good 60-80 odd points. So 25-22 as a pivot should be the view on here.
So Manoj, auto sector actually before market started doing well, auto sector was performing well, and now we are seeing auto ancillaries also picking up steam. Do you think auto sector will take a breather or it might continue? And what about the ancillary space?
I guess autos, because as I was saying, last 3 to 5 odd days of the July contract, the autos a bit they are underperformed, but there is a possibility it might work in tandem with the Nifty. So an underperformance obviously is not expected. Auto ancillaries, I guess yes, there is a possibility because I guess Bharat was, and if I can say escorts is where we have seen good buy up, and so a couple of stocks it can outperform, but stock specific I believe more of the bigger boys like Maruti, Tata Motors, this might be working in tandem towards the Nifty market.
Great. So we have got a question from Mr. Vinod, oil and gas sector.
Yeah. So Vinod, generally how it happens is when we have some cautious move or when we have some volatility into a sector, we see a lot of positioning happening on the short side. And generally, when there is a reversal, we see like exactly what happened in Nifty. There was a Nifty usually has around 60% long and a 40% shorts, and it gets rolled on. So this time we have lesser performance because out of that 40 shorts, I would say only 20 has rolled in. So same goes with oil and gas. This sector, the rollover, if you see in this graph, I guess they have mentioned here, it is lesser because we believe that the short positions have not really rolled. So once yeah, so if you see in this slide, on the lower side, when I mean lower, obviously it is 90 odd percent. So on the lower side, we have not really seen oil and gas. This could be one of the lowest rollovers that has happened. So the good part is there is a possibility of this catching up. But as of now, we stick with just like we have seen good buying happening in ONGC and stocks like that. But till the time there is no long built up, the entire sector might not outperform. Stock specific, yes, as I said, 25 and above for Reliance and ONGC, there should be two stocks that can still be on the long side or give you a positive alpha for all these things.
Thanks, Manoj. Dear participants, if you have any questions, request you to type in your question in Q&A section. Request you to type in your question in Q&A section. Mr. Azharuddin and Mansi, we hereby request you to please type in your question in the Q&A section. The question should be in context to index. Tata Motors. It is again a stock specific questions.
Yeah.
We are here to welcome all the index related queries.
So stock specific, just send a mail to equity research, obviously, or we have the numbers where you can call in. So we give you the tools on that, because obviously that comes to almost a good 150, 180 odd stocks we have. So that query might be more stock specific.
So Pankaj Gupta wants to know about your view on pending gaps in Nifty. So it's a very interesting question.
So first of all, pending gaps, I guess, as far as I understand, is more of a technical query. So Gaurav can be a better candidate to answer that. Yeah, Gaurav.
See,
Gaurav.
the gaps which are pending, let it be, not filled as of now. As of now, we are bullish, and that, as sir has also mentioned, so Nifty might trade in the range of 16,500 to 17,400. So yes, so don't focus on gaps as of now. So the previously gaps which were pending to be filled has been filled now. Now, and Nifty has now, more in a more will be in a consolidation mode. So let's just not focus on gaps as of now.
Pankaj, I would like to contribute over here. So if you look at Nifty chart, and if you look at daily Nifty chart, you'll always find, and especially when there is volatility, that there will be gaps. So you have gap around this 15th and 18th July. You also have gap on 19th and 20th of July. Then last two sessions there has been gap up happening. So we are in a market which is still in a range. See, if you look what has happened since, if you look at the timelines, since September, or almost 1 year now, market has not gone anywhere. So September or August end, market was at same levels what it is today, 2021. So you are in a range. In a range, you generally don't try to give too much of weightage to gaps. Gaps are generally, gap theory generally works, and this is technical and not to do much with rollover webinar, but still to address this query. Gap theory generally works in a trending market. So when there are 2-3 gaps, you will try to figure out that there might be some pullback which will fill those gaps. But in a range bound market, you should not give weightage to a gap theory. That's what Gaurav was also trying to tell.
Thank you, Siddharth, for a valuable input. So we have got a very interesting questions from Snehesh Kapadia ji. So please take a option chain data session. Snehesh ji, I've already noted down this, and we'll discuss with the concerned department and team, especially with Manoj.
Yeah, so just to add, we are doing this on Tuesdays, I guess. No? So this is more of the same thing, the derivative trading session if we do on Tuesdays.
Yes, yes.
Yeah.
So as per the plan, we can just proceed further, and we'll incorporate this also. It has already been there, I believe, right? Option chain series. Correct. So we have already noted down your feedback. So we'll surely come up with the option chain data session. Thank you for your valuable feedback. So Mansi Saxena, Bank Nifty बता दीजिए एक बार sir.
Yeah. So Gaurav, would you like to give levels on Bank Nifty?
So Gaurav, I'll appreciate थोड़ा सा आप अगर हिंदी में बता पाए.
सर जैसा कि लास्ट एक्सपायरी में हमने देखा कि बैंक निफ्टी में बहुत अच्छा मूव आया. सो बैंक निफ्टी 33,800 से 37,000 तक आया. रफली 12% मूवमेंट आई. अगर रिलायंस का कंट्रीब्यूशन ऑफ कोर्स निफ्टी में नेगेटिव रहा तो उसको हटा दे तो बैंक निफ्टी में आउट परफॉर्म किया है. सो सर ने जैसे बोला कि यस आउट परफॉर्म कर सकता है, बट मैक्सिमम 1 से 2% तक आउट परफॉर्म करेगा. वी आर नॉट एक्सपेक्टिंग बहुत बड़ा मूव यहाँ से बैंक निफ्टी का जैसा उसमें लास्ट एक्सपायरी में आया. सो पोजिशनली इफ यू वुड टॉक अबाउट द लेवल्स, 38,500 इज द लेवल वी आर आइंग फॉर इन बैंक निफ्टी, और नीचे में सपोर्ट 36,000 पे रहेगा.
So I believe मानसी जी आपको आपके सवाल का जवाब मिल गया है. Right, thank you. So Vinod, there is a question from Mr. Vinod. When there will be not webinar, please take web on features and derivative.
That's
Okay.
the same thing. Yeah.
So it is the same thing. So any other questions? Mr. Azharuddin, request you to type in your questions in a Q&A section so that we can address your query.
So I guess Swaraj, if queries we can conclude this.
Perfect. So we have not received any more queries because all the queries has been addressed. So with this note, we are going to conclude the call. Right. Thank you so much for joining with us. Have a nice day. Take care. Bye-bye. Good night. Take care.